Today was a big day for markets and for Tesla. Not because Tesla was down over 1% today. No, it was because inflation for the first time in 2024 actually decreased on a month-over-month basis. It came in lower than a lot of banks were forecasting and was overall great news. This pushed the Nasdaq to a new all-time high, mainly led by semiconductors. But I do believe if inflation does continue to trend lower and the economy does continue to stay at a subdued level, because that's where we are right now, retail sales confirmed a 0% month-over-month change in retail sales, then I think Tesla could be in a sweet spot to do pretty well. It looks more and more likely that July is going to be the first cut from the Fed, and that's what Morgan Stanley believes as well. I'll go over that here in this video. This could mean a strong summer rally could be coming for Tesla stock. But not so fast. Before we jump to conclusions, we need the data tomorrow. The data coming out tomorrow is Walmart earnings. Walmart will definitively be able to tell us how the consumer is doing. If things are good, Walmart's going to be optimistic. If things are bad and consumers are actually slowing down at any kind of material degree, then Walmart's going to come out and tell us that. And whatever Walmart says, I'm looking at it like a smoking gun for the consumer. Am I right being cautious about the consumer right now? Well, if Walmart says consumers are cutting back and slowing down and lowering profit forecast for the business, then maybe the I wouldn't say bearishness, but conservatism is probably warranted here. And again, maybe Walmart has good things to say, and we'll go over that here in this video. Also, what kind of effect this could have on markets coming tomorrow and over the next coming weeks. But let's just be honest. This CPI report today, this retail sales number, is great news for Tesla. As I said in the last video, Tesla stock over the past 2 days has been trading alongside AMC and GME and some of your heavily shorted stocks because Tesla is a heavily shorted stock. Believe that or not, Tesla's still one of the most, if not the most, shorted stock in the markets by a overall dollar basis. I believe it's the number one most shorted stock. It was overclipped by Apple at one point, but I believe Tesla is still in the number one place. So there has been over the past couple of days this notion of, hey, let's squeeze the shorts. Any stock that has a high short interest or a high dollar amount that is sold short, buy that stock. That's been the overall narrative the last couple of days. Well, GME, AMC, they're down today. So now all of those other stocks that were following that same narrative are also down today. Even though CPI was great news for markets, it's not having the same positive effect on Tesla as we went throughout the trading day. When we initially opened for trading today, Tesla stock did well. It hit 180, it got rejected, and fell to about 175 or so. But I do believe over the next coming weeks, markets will, shrug off the whole meme stock situation. Whether GME or AMC go up or down, I don't think that's going to matter as much to a stock like Tesla if we just give it a couple of days. And again, I do think the CPI today and retail sales come together to make a pretty good situation for Tesla. So I'm pretty optimistic here for Tesla, as long as tomorrow, well, we don't get a disappointment from Walmart. But more on that in just a couple of minutes. First things first, this is what Goldman Sachs just said about the CPI report today. Goldman says, based on details in the PPI and CPI reports, we continue to estimate that core PCE price index rose 0.25% in April. We continue to expect the Fed to cut the federal funds rate by 25 basis points in July and proceed with cuts at a quarterly pace thereafter. 10-year Treasury yields are down about 10 basis points today, down to 4.34%. Markets have raised the odds of a July 31st cut from the Fed by 29.2% yesterday to 33.3% today. So you're actually only up like 4% as far as your increased odds of a cut July 31st. There's still a 62.9% chance of no cut in July. September, you're getting more solidified on your cut. 51.1% odds now of a cut coming September 18th. I actually think there's going to be a cut July 31st, September 18th, and likely December 18th. So I'm still thinking we're going to get 3 cuts this year. Markets are currently at 2. There's 37.8% odds of 2 cuts by December 18th, 24.3% odds of 3 cuts, and 25.0% chance of only 1 cut this year. So these CPI numbers, while they are having a large impact to the bond market, as far as the time of recording this video, it's not moving around expectations too much for interest rate cuts by the Fed. Knowledge Vital today says the CPI print is quite dovish. The 20 basis points sequential cooling in the year-over-year rate of change was the largest drop in several months and means the disinflationary process is back on track. Meanwhile, rent is still running quite hot, which means non-rent prices are easing even more than it seems on the headline. If today's gains hold for the S&P 500, the new all-time high will extend the current bull market to 581 days, dating back to its starting point on October 12th, 2022. The index is now up nearly 50% during this bull. Ouch! T.S. Lombard had this to say today. The data is giving confidence in the Fed's plan to cut rates later this year. I doubt current economic wobbles continue, but if they do, the Fed should have cut in March or December. The key lesson to take home, Fed cuts will be late. Ouch! Morgan Stanley said today, CPI deceleration adds to the convincing evidence the Fed needs to start cutting soon. We still expect more deceleration ahead, especially in the second half of 2024, and we maintain our call for a first cut in September of this year. We have new updates for the end of the year targets by major banks on Wall Street, or just firms. They don't exactly have to be just banks. The street high is BMO, and they're at 5,600 for the SPY. Wall Street's low is JP Morgan at 4,200, which does show quite a difference between especially EPS estimates, but targets as well. BMO is at 250 for 2024 EPS. And JP Morgan is at 225. Even longtime bear Mike Wilson has a 4,500 price target on the S&P 500. So that's pretty interesting given stocks are now breaking out to a new all-time high today, at least for the NASDAQ. The S&P is also at a new all-time high at about 5,300. So most of those price targets I just mentioned, well, they're already exceeded. These are all reasons why I think tomorrow's earnings from Walmart is going to be so important, because let's be honest, if there is any company out there, period, that can give you a glimpse on how the consumer is doing, it is Walmart. Based on how many employees they have, based on how many stores they have, how much foot traffic they get, and the overall reach of the US population that they have. Also worth mentioning is like Apple, for an example. Apple, yes, sells their products to people, but they mainly sell a lot of iPhones through like upgrades and things like that. So other companies are not a great example of how the economy is doing. Apple's not, Microsoft's not, Google's not, Nvidia's not. Tesla's a better example, but I think that is mainly an interest rate problem. And that's why Tesla's deliveries have been slowing down a little bit. But Walmart, that is the company for the consumer. Okay. Now, if Walmart tells you people are slowing down, then that's not great. Now, I don't know how much of a dire warning they could give. It's possible. I mean, we'll have to see. It's really a toss-up. Walmart could say people are doing okay. They're doing fine. There's so many different outcomes that we could get from Walmart's earnings. And I think the markets will pay attention, because if Walmart is warning about the consumer, they did that in August of 2007. And anyone that was around invested during that time knows that Walmart was like the first company that put the markets on notice about the consumer and about the consumer slowing down. And I think that is happening right now. So I think we're going to hear the consumer slowing down, and, bucket sizes, basket sizes, checkout amounts are getting lower, and probably Walmart reduces their full year profit expectations as well. Kind of what happened back in 2007. And I think the markets might wake up tomorrow and say, oh crap, the economy is not nearly as strong as we thought. And this could actually have an impact in the bond market as well. Judging off of retail sales numbers that came in today, well below expectations. The expectation was 0.4% month over month. You came in at 0% month over month. So not negative, but pretty dang close. And the next revision is probably going to take that number actually negative. So you are definitely on a path of the consumer slowing down. I mean, just take a look, right? February, you came in at 0.7%. March, you came in at 0.6%. April, you came in at 0%. Next month's probably going to be a negative number. So this retail sales number just kind of added to some of my worries about the consumer. It definitely didn't make things better with retail sales missing expectations by that much. And I do think whether or not the markets pay attention to Walmart earnings tomorrow, whether stocks broadly react to it, I think you want to pay very close attention, because Walmart is the best leading indicator. There is no better leading indicator than Walmart. If Walmart has troubling things to say, that's something, take that as a warning that stocks at all-time highs are not going to last. The economy is not going to last. The Fed's going to be too late to cut rates, and we're probably going into recession. That's how I will take a cautious Walmart tomorrow. Now, if Walmart says things are just fine, then I think it's a time to get reallocated to interest rate sensitive stocks, because that's the area that will be next to benefit when inflation does continue to fall and if the economy holds up. That's how important I think Walmart is tomorrow. I think Walmart is a thesis changing earnings coming tomorrow for the bulls and for the bears. And that's why markets may react to Walmart a little bit more than they do normally. Coming tomorrow morning, you will also get building permits, preliminary numbers for April. You're expecting 1.48 million. I'll tell you, the higher the better here, because more building permits, presumably more buildings, less housing inflation. That's kind of the way to think about that. This number never causes a huge reaction in the market, so I doubt it will this time, but it's worth mentioning. It's highlighted in red. It's a big data point, so we'll see what happens. You're going to get housing starts month over month. These numbers are expected to be a positive. Last month you were negative 14.7%. You're expecting a positive 3.8% number. So really, that's not that great if you're only positive 3.8% after being negative almost 15% the month before. What will be important as well tomorrow is Philadelphia Fed Manufacturing Index. Expecting that number is going to come in at about 4. Last month was 15.5. So that would be a sharp slowdown as well. You will get Philly Fed business conditions. I think that could be an important one to be watching for as well. Philly Fed CapEx index, Philly Fed employment, Philly Fed new orders, and Philly Fed prices paid. Prices paid is a very big component of these district surveys. If prices paid are going higher, then that is usually a negative for markets. Markets typically react to these prices paid numbers. Now, tomorrow morning, and I should mention, all of that data comes out at 8:30 in the morning. At 9:15 in the morning tomorrow, you will get industrial production month over month, expecting that will decrease from 0.4% last month down to 0.2%. Capacity utilization, industrial production year over year, and manufacturing production month over month and year over year will also be coming out. Tomorrow morning, you will get a speech from Fed Barr. He is the regulator for the banks. So just he usually doesn't move the markets. He can, but he usually doesn't. He's the guy that everyone blamed for SVB, right? For First Republic, for not overseeing what was going on at those banks. So usually he doesn't talk monetary policy, but it's possible. Fed Harker will be speaking, coming at 10:30 in the morning tomorrow. That one will be a little bit more important. Fed Mester is probably the biggest one of tomorrow because she is the biggest hawk of basically any Fed speakers right now. Her and Kashkari are super hawks as far as recently. So she speaks at 11:30 in the morning. That will be important. Fed Bostic speaks at 3:50 p.m. tomorrow, and then you will get industrial production and retail sales, as well as the unemployment rate coming out for China at 10 p.m. coming tomorrow. So Friday could be an interesting day, depending on all of this data that we will get tomorrow, and especially with the data coming out of China. Now, for Tesla stock specifically, option activity by big money is still very light. I think big money is trying to get repositioned back into Tesla. If I am a retail investor and I make, stock market videos on YouTube, and I can tell you everything just changed for Tesla after Tesla's last earnings, I think the hedge funds and institutions are trying to get reallocated back to Tesla as quickly as possible. The ones that are bullish, at least, right? The ones that are not the perma bears on Tesla. So option activity is basically nothing, less than $10 million worth of option orders today, totaling 52% for your positive order value. So slightly positive today, but the dollar amount's just pitifully low. You do have a multi-year high short position. Like I said, not everyone is a fan of Tesla right now. Which is quite ironic, right? If you're short on Tesla and you're betting Tesla does poorly, in some degree, you're also betting the economy is going to do poorly, right? Which is, I mean, the contrary trade that I don't think a lot of these shorts would want to make. General consensus right now by Wall Street is the economy is going to do just fine. Which, if you're short Tesla, how is that your opinion? It just doesn't make a lot of sense to me. You do have 3.86% short interest off free float, $19.02 billion currently in short positions, with 107.12 million shares that are currently sold short. Not a lot of shorting activity took place today. Cost to borrow fees only about 1%. And look at that. The big short investor Michael Burry piles into physical gold fund, making it his biggest bet. So he seems quite worried about where we are in the economy, and I do as well. That's why I have a trade out that I think could be a once in a decade opportunity. If you guys want to check that trade out, go read the thesis on that trade. Link down below in the description of this video. Since the day I made that trade, it's been working for us every day, and especially today. It is a trade in the bond market. And I don't know if that was just great timing, but this is a multi-month trade. This is not a short-term trade. This is a multi-month trade. And I have a lot of confidence in it. And tomorrow with Walmart, it's either going to confirm I'm right or I am dead wrong. And I'll be making a big change coming tomorrow based on that. Either going in heavier or, maybe just backing away from the trade entirely. Nonetheless, if Walmart does give a bad warning, then, I think Tesla's priced for bad, but if we do go into a recession, if we do go into some kind of big slowdown out in the economy, I think there would be more fear, more panic in a stock like a Tesla, right? In just the broad markets for that matter. If Walmart comes out with really, not a warning, if they come out with good things to say, then I think you want to be a lot more optimistic about markets, about interest rate sensitive names, about a stock like Tesla. And I think even to some degree, how perversely this may sound, if Walmart comes out and warns about the consumer and the economy, markets might actually take that as a positive. Because, right, if the economy gets weaker, the Fed's going to cut rates. But inevitably, give it enough time, the only thing that will matter is the economy. The Fed and cutting rates 6 times or 2 times or 1 time or 10 times. None of that's going to matter when you actually do start to look like you're heading into a recession. So I don't know how tomorrow morning is going to be with Walmart, but I do know it will be by far the biggest earnings of this earnings season in giving you more information about the consumer and about the economy. And I don't know how much markets will directly react to that, if that will be something the markets react to in a positive or negative way. I think there will be a reaction by the markets, but I do also think this CPI report that we got today was great news. The retail sales number coming in light really adds to the theory that the economy is not running red hot, that the Fed should think about cutting rates sooner rather than later. And I do believe a drop 10 plus basis points on the 10-year treasury today will be seen as a positive for Tesla. Again, the hangover effect of Apple and GME falling today is likely having a negative impact to Tesla and a negative impact to all of the other stocks that momentum has really been in favor of the last couple of days. So it wouldn't surprise me if Tesla could actually be quite green tomorrow, based on even the CPI report that we've seen today. And the realization that, hey, if rates fall, that is like the best news in the world for Tesla. I mean, Tesla is offering this 1% interest rate for the Model Y throughout the rest of this month, and look what happened, right? The Model Y on search trend activity went from 28 to 46. There is a lot of orders being placed for the Model Y based on interest rates falling, Tesla buying down the interest rate. Just imagine when rates do start to actually get cut in any kind of meaningful way. I think this is confirming to you that Tesla's demand slowing down is not based on a Tesla problem. It's a interest rate problem. And I think the markets haven't even quite figured that out yet. I think some people in the markets still are under the assumption that hybrids are eating Tesla's lunch, or some kind of distorted, weird reality of the actual situation. The actual situation and what's affecting Tesla stocks and Tesla stock and Tesla's deliveries is interest rates being unaffordable to finance anything. So with that said, I do think Tesla stock is pretty close here to seeing a short squeeze, pretty close to having the perfect storm, if you will, for the shorts and to drive Tesla stock much higher. I still think within a month or two, Tesla stock's going to be well into the 200s, as long as, again, nothing goes utterly wrong in the economy or, recession fears start to rise. So nonetheless, let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.